The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, traders. I was trying to give a extra couple of minutes here to let people trickle in, but I'll tell you that the shakiness of the market has rattled a few folks. I have no doubt. I've seen it in the coaching sessions I've been giving in some one-on-one. I feel it in my own trading. So I get it. I get it. Those of you who are here, welcome. Thank you. Congratulations on your perseverance as we grind through whatever we're dealing with. We'll talk about it. We'll figure it out. But mostly welcome out to the Tradespoon live trading room, stocks and options closing bell. My name is Scott. I'm the head trading coach. I will be your host. Let's get through as quickly as we can the housekeeping matters. Trading for a while, teaching for a while. That's me. Here's the disclosures. Be careful. Manage your risk. We're not advisors. This is for education only. Have a plan. Stick to the plan. Manage your psychology. Okay, let's get cracking. Good afternoon, Phil. Thank you as always. Good afternoon, Fred. Good to see you. Give the close an A, whatever. Ooh, blind call. It's a blind call. He's ready to make his put his stakes down. I love it. What are the markets doing? Well, they're off the lows, but they're definitely still down. S&P down 1%, Dow a little over 1%. NASDAQ only a quarter. It actually went positive for a minute. So tech is continuing to show some resilience where small caps continue to look real shaky, right? The Russell has shown a shakiness that is a bit concerning, without a doubt. Oil down over 4%. That's quite the negative day today. What's going on? Credit, it's banking issues, right? We even said just recently, we're like this, the financials are feeling shaky. We saw some lingering hope in the credit markets, MasterCard, Visa, American Express. But even there, as we were waiting to see if a signal developed, it didn't. It broke harder. And we was like, yeah, there's something wrong. In our sector rotation, it's told us there's something wrong in the financial sector. So there was concerns there, and you can see what it was that was building. We've had some failures and some concerns, fresh turmoil in the banking sector, in the financial services arena. Goldman Sachs's U.S. GDP forecast warns of ripple effects within the banking crisis. Oil prices crater as inventories build. Fink warns higher rates exposed cracks in the financial system, which then could ease and transition. Right, we keep talking about what's the Fed going to do and why. Okay, well, certainly, inflation is a problem. But if they're realizing that these higher interest rates are exposing fundamental flaws in the context of the economy, they're going to maybe ease and say, let's still do a quarter because it's better than nothing. We're seeing impact. Let's slow it down to give us a chance to adjust as necessary. That's what I think, but we'll see what happens. What else is going on? So that's basically it. It's the turmoil. It's all about banking fears. Are your deposits safe? Right. What is going on within the financial services, and how is it going to impact everything else? Okay, so there's that. Let's take a look at the calendar. I feel like I feel like most of the week's already gone by when we talk on only Wednesdays, but what have we had? Nothing on Monday. Hello, John. Good to see you. No quiz yet. John's the D- blind call. Fred's an A blind call. I love it. Market information. What do we have? We did have some numbers on Tuesday. Stalled on inflation, right? It stalled a little bit, but that's better than going up. If there was a slight uptick, right? So we were expecting consumer CPI to come in at 0.4. It came in at 0.4, which is down from 0.5. Okay. Ted's another blind call, C-. Core CPI was expected at 0.4. It came in at 0.5, a slight uptick there. CPI year over year, 6%, down from 6.4 as expected. Core CPI year over year, 5.5, down from 5.6 as expected. I mean, is it a huge drop? No. I think if you're going to have a soft landing, you have to ease a little bit. Right? I mean, maybe they'd like it a little faster, but like I said, with cracks being exposed in the foundation of the financial system, the Fed's going to have to take that into account, and this would, in my opinion, help out as far as that goes. Retail sales, we were at 3.2. We came in at minus 0.4. This is the funny one, because if you're watching the talking heads, they're like, retail sales are down. And it's like, well, yeah, of course they are. It is impossible. It is absolutely impossible for inflation to drop if sales continue to grow. That's counterintuitive. Remember that. So if they're like, oh, sales are down, what's happened? Of course they're down. That's the effects of raising interest rates and other things, is to curb the demand. If you curb the demand and demand wanes, what happens to prices? Or what happens to sales? Sales drop. And as sales drop, what happens to prices? Prices drop. So that has to happen. Now, if retail sales dropped at a huge margin, 2%, 3%, 5%, okay, problematic. But consumers, a small portion. I mean, yes and no, right? Remember, the indomitable U.S. consumer definitely is something we're thinking about. Now, let's look at core numbers. So we looked at CPI. Let's look at PPI. PPI numbers have dropped, right? They went negative. Core PPI 0.4 down to 0.2. PPI year over year 5.7 to 4.6. Core PPI year over year 4.4 to 4.4. So across the board went down. Now, Empire State Manufacturing dropped significantly. I don't know. I don't know what that impact is as far as that goes. Tomorrow, jobless claims still expected to come in on at or around 200. As I said, if it is above 250 3 weeks in a row, then I'll be like, ooh, oh, this could damper things. Industrial production and dampen both. Both. It'll do both. Oh, and then we have production and capacity utilization. Okay. What is the market showing us? Stella has gone slightly negative now at this point. If we cannot break out of this over the next day or two, a drop to the downside. Hedges still in place. I actually took profit at 5%. From the initial, I got a 5% move from one of them, and I took some profits, left some on. Remember that if you never take profits on hedges, they're never going to work. You have to have a cadence for how and when do you scale out, take some profits. Can I take some and then add more? Absolutely. Can and will. But I've had a lot of comments recently that have, a lot of people have commented about appreciating the time that we spend talking about hedging and when and why and what can help us to see it when we're not necessarily seeing it. It's the art of hedging is overcoming confirmation bias. What are you hedging? Something bullish. You're already doing something differently, right? And so, yeah, it's easy to get where you only see one way and you need to have something that's like, but wait, what about this? What about this? And so as you're thinking about hedging, if you're starting to do it more, be thinking about how and when would you take profits? What if it drops 5% and then recovers? Well, then I'm glad I took 5. For me, the levels are 5 and 10. I will definitely be booking gains on a 5% and a 10% move. I also want to leave something open if I can, even if it's just a contract or two, just in case the shit hits the fan in a big way and we turn bearish, right? We end up dropping into like 18 to 20% off of highs type of a situation. So hopefully I still have something on for that. And hopefully I've at that point transitioned myself to be basically bearish. I'm no longer hedging at that point, right? At that point, it becomes a speculative trade, and there's a good chance that you start adding to it. And then at that point, so here's what's interesting. I don't think I've talked about it in this way, but if you're bearish, if you've got puts and then you added some, then in that situation, the hedge is the calls, right? The hedge is the calls. So if you have old hedges that are now speculative and you've added bearish speculative positions, and then all of a sudden I get a signal like, oh, I don't know, a lower high on the VIX, which is the opposite signal of the higher low that triggers the bearish hedge, then in that case, the hedge is adding bullish to the bearish in order to say, hey, if this thing all of a sudden turns around, we know it can catapult. This market has a lot of powder in the keg for a sharp, big move up, small pullback, big move up, and then settle into a steady trend if and when that bullishness comes. It can come fast. And so I want something in place so that as I'm cleaning up and managing bearish, I've got something bullish that's starting to do its job. So the hedge can go the opposite way if you're bearish. Just think about that. And I guarantee some of you probably are more bearish than bullish if you were to look at the positions that you have on right now. So, okay, that's the soapbox hedge discussion for the day. Let's go look at QQQ. Neutral, saying that we're maybe hitting some resistance sideways, maybe a little bit sideways in a channel, but hitting some resistance. Okay, fair enough. Fair enough. Well, now this is a surprising one. Looking for a sharp, steep jump on the blue chips, the large cap stocks, which would, in the model's estimation, break the old high and then followed by an even bigger move to the downside. So certainly a decent amount of volatility there. Let's take a look at what the small caps. I can't see the small caps looking the same way. I got to be honest. I think it's going to look quite the opposite. Oh, in the middle. A little bit of an uptick followed by a bigger move down. Quite honestly, for me, this could be a bearish setup, a bear flag type setup on the IWM. If we just made new lows, which we did, let's go take a look. Let's go take a look. IWM. I don't know why I feel like singing today. Yeah, look at that. That's nasty, right? You can see that uptick in volatility really smashed it down, holding this support level around 171.5. If we bounce up off of this and we don't get, for me, the number is about 178.5. It's about a $5 range. And if it gets up off of this range and it can't get above and then it rolls, then yeah, I'm looking for the next drop down to 163.5. So there's about a 15-point drop. 15 on 178. That's about a 9% drop. That's a good, that's what we had here, right? This was about a 20-point drop on 190. So that was about a 10 and a half, and we're talking about the possibility for 9. So if I were to increase my bearishness, I want to find what's looking the worst. What's looking the worst? Small caps. Small caps look like trash, right? It makes sense. Where's the money going? In or out? Doesn't matter. Let's find it. And then let's look for a potential setup, wait for it, and then jump in if we get a trigger. Love it. Okay. Let's get a quiz, and then we'll come back. We got to get the quiz in. I've got too many people itching to get their pre-quiz guesses in place. I need to move this over. Sorry, I'm just making some internal arrangements here. So quick temperature check here. How's everybody feeling? How is everybody feeling today? Okay. I'm going to make it easy. We've got to close at ludicrous at or above. Where does that put us? I'm going to call it 173. Okay. I like your honesty. Okay. Not great. I mean, look, if you were like, I feel fantastic, I'd be like, really? Why? Hey, we could do better. 173.5 on one side and 172.5 on the, oh shit. Sorry. Shoot. Yeah, let me get SPY. Same basic quiz. Ooh, I was close. Can I squeeze it on my line? No, I'm gonna have to redraw it. All right, let me redraw my line. My bad. We're gonna go 388.5 because I like the half increment today. Boom, 388.5 there. And 387.5 on the downside. 387.5. A, above 388.5. B, you're inside that dollar range we've been sitting in. C, you think we're going to drop below. And I'm going to go B. I think we're going to sit right in this range that we've been sitting in for the last, we might break out of it one way or the other, or both in the next 33 minutes, but it's going to sink back in and close right near 388. Okay, Fred is an A already. Pre-flop call. Fred is an A, Jacques is an A, John is a C. Phil is joining me, so is Brad. They're both in the B range. I think it's going to settle back into that range. Oh, look, the numbers popped up quite a bit. Good. We had some stragglers come in late. You might have missed the first few minutes when we solved the market together. We can't really share it. Anybody else want to get in on this action? Come on. Looks like the breakout. You can hurry and call out the A. All right. I'm going to assume everyone who wants to participate is in. I'm going to close her down. Let's move on. How does this look in context? Choppy, right? Right. And here's the thing is people are like, oh, did we have a signal? The problem with this is it was a lower low on the market, which means most of what we were looking at was likely in a lower low scenario as well. If yesterday you entered anything bullishly because it was at a higher low, then you're going to have to decide, how do I manage that? How do I manage that? But this was definitely, you can see, we started talking on Friday back here, and early in the morning, it was like, oh, it looks like this might hold support at 392. It didn't. And then on Monday, tried to recover, couldn't. Yesterday, we got a little bit of a bounce. Today, it's kind of not doing as much. If this doesn't get above 400, maybe even 395 for me. If it goes up and it gets to 395 and it can't move and it starts to drop, boom, adding bear, adding negative delta to the scenario. That's what's happening. Alcoa, woo! Man, back here we were like, hey, you know what? If Alcoa can hold at 50, we like it for a cup and handle. Remember, we always put an if on there. Don't forget that if it can hold. There was nothing. Then down here, you're like, well, is it giving a signal? What at this point you're at a lower low? That changes the story that you're working off of, a lower low. This selling pressure changes the story. At this point, what's the story? At this point, the story is a dead cat bounce. And if it bounces up and doesn't get very far and rolls over, it creates bearish opportunities. We're going to go through the watch list here. Actually, no, we have a little bit more to do back here. Hold on. Whoo! We knew it could drop. And it has. And we typically expect a little bit of a bounce and then a little bit of a pullback. And then from, this late March 23rd, 24th, we tend to get a nice little bounce all the way through May. Are we going to get this? It's not looking good for that right now, right? It's definitely not looking good for that. However, if it goes up and pulls back and doesn't pull back much and turns, there's a good chance I would get that higher low signal. And I would have what I would need to possibly, and again, it might not be speculatively bullish. It might be balancing bullish. It might even be hedge bullish. But I definitely want to be aware of what would it take for me to decide, yes, I do want to put a bullish trade on. And I also want to decide what would it take for a drop. Okay, let's keep going. Apple. So if you traded Apple, I would say it was a valid trade, and I would say you would still be in it. Nothing changed from yesterday to today. Technology is holding up. Apple is helping hold up technology. That is a higher low. That is a valid turn. It's all there. And if you hadn't taken it and you thought I do need something bullish to balance, great. I'd have a pretty tight stop right now. I can get in at 152.5. I can put my stop loss 3 points away. If Apple moves, there's a good chance it gets at least 10 to 15. And I can establish a bullish trade with only 3 of risk. Okay. Now, am I saying, hey, this is a great time to trade Apple? It depends. What do you already have? Are you already bullish? Are you already bullish in technology? If not, and you feel like you need some positive theta to balance out and to complement the portfolio, then that is a consideration. And you would look at it and say, do I have a trigger? Do I have a setup? Do I have a stop? Do I have a target? Do I have everything I need to establish this as a trade? All right. ADI, a chip leader, but mostly sideways. I would say there's really not much there for us. Archer Daniels food still looks no good. We're not seeing defensive posturing accompanying this. We're not seeing all of a sudden like, oh, let's move back into staples. Let's move back into utilities. Let's move back into healthcare, whatever the case may be. Let's look at we didn't see the heat map. Let me get rid of this. Let me just make sure this is new. Okay, so what's getting hurt? Energy, battered. Materials, battered. Industrials, battered. Financials, battered. Semiconductors, yeah, not great. Apple's flat. Microsoft is up. Some of the right. We've actually identified AMD as being one that we like. Looking green, but there's definitely some red there. Communication services, we like it. Consumer cyclical, mixed bag. Consumer defensive, a little bit better today. An interesting disbursement. Healthcare is kind of neutral, as it were. But you can see there's a bit of defensiveness with utilities, with defensive, a little bit of healthcare, but not a ton. So we'll definitely want to keep our eye on that. Okay, let's keep going. All right. Where were we? Back to the watch list. Let's get this going. AMD. Oof. That would have been that was the signal. There was something there. It was a big entry day. Anybody take that trade on AMD? That was one we had been discussing, but that was admittedly I would say that was a difficult entry based on the size of the candle primarily, but certainly there was prospects there. Yeah, I'm curious if you took it. If you did happen to take it, let me know. I'd be curious to know. Amazon. Yeah, we said Amazon was a maybe. It was trying to hold a support level back there. Again, a lot of this would be dependent upon what you had already prior to, and what you were looking for by total risk management. AXP, right? We said right in here, we were thinking, and then it never gave a signal, and then it just fell apart. So now what? Now I'm thinking, hey, if the financial sector is going to have some nastiness, let's be ready. I mean, some of you may have already been shorting some or buying puts on some financial companies. And that would make perfect sense, right? Boeing, that could have got you. That was a tough one. I mean, if you took that entry, I'd be like, yeah, I see it. And if that happened, there may be a chance you stopped out today. Baba still down. Caterpillar ended up with a lower low, which kind of nullified the signal, as did Deere. Now, if Caterpillar and Deere lost their signal, that would very likely say, you know what, Caterpillar or Boeing is off the table as well. So I don't know. Apple, I could see. Boeing, I would say probably less inclined that anyone took that trade. Where are we? ConocoPhillips getting smashed. We actually talked about the possibility of bearishness in here as this thing rolled down. Didn't end up putting the trade on. I just wasn't feeling bearish at the time. I mean, obviously, it's gotten worse since then. But a lot of that's based on new information over the last week, right? Costco holding up. That was a tough because it held in the shadow, but it didn't really hold this. That's a judgment call. DBC is down. John Deere is down. Diamonds are down, but maybe holding support. Disney is down. FCX materials down. FDX down. That was one that we were thinking, can it hold up? No. The answer was no. It can't hold up. Can't, didn't, wouldn't, etc. Okay, let's keep going. China, no good. Gold. Oh, there's gold. We said this, gold could show, and it does look like it's bringing a little bit more of a defensive quality with it. Goldman. Bull call on gold. That makes sense. Goldman looks terrible, of course. IWM looks terrible, of course. Jets, terrible. MasterCard, yeah, I mean, it's not terrible, but it's also, it's like an okay house in a bad neighborhood. Are you interested? What if it was a great house in a bad neighborhood? Are you interested? Probably not, right? I want an okay house in a great neighborhood or a good house in a great neighborhood. Or a great house in an okay neighborhood. I'll take that too. Like, yeah, okay. Facebook. Cheap house in an expensive neighborhood, right? Yeah. I'd take it. Facebook looks pretty good, man. Or Meta, sorry. The artist formerly known as Facebook. Still has some bullishness about it. The best of tech, that, and maybe Microsoft. Let's see what Microsoft is showing. So you can see Microsoft gave a pretty decent looking signal on this, engulfing, continuing to move. If you chose tech, I hope you picked either Apple or Microsoft. Microsoft or Apple, those were the two. Still are, obviously. Netflix, yeah, it's a little late now. Netflix is down at lows. NVIDIA actually still looks okay. NVIDIA is probably the best chip stock. So I would say that there's definitely some possibility to that. Oracle down. QQQ. I mean, it's actually trying, right? I mean, it's down, but it doesn't look terrible. Look at our weekly chart. Let's say you knew nothing but this weekly chart. What would you say? You would say, well, we were in a bearish situation for a while. Then we seem to have stabilized sideways. Then we broke up out of it and got to a new high. And now we're pulling back. And if this pullback turns, and this goes this way, then this is a higher low than this, right? Though I'm not a big fan, this market makes me want to think about straddles. Ted said, yeah, higher low, let's go. John said, I agree, right? Like from the longer term, if this is what you saw, you'd be like, yeah, this thing looks like it's trying to work its way out and finish the reversal process. Is there still some volatility as we finish a reversal process? Of course there is, right? So again, have we seen some short-term things that introduce a bearish escalation? Yes. Are we going to run around waving our arms thinking the sky is falling? No. No, I say. Okay. All right. Let's keep going. Hell no. What time is it? Oh, we're good. I don't think we're going to end up with any trades necessarily today. There's the QQQ just kind of hanging on. Starbucks is at new lows. So anything that's along these lines, what's my thought? My thought is make sure I understand the line of consolidation, something like this. Understand, I'm not trying to pick this low here. I'm trying to see at what point does it do this, then do this. And I say, it's worked its way out. It's worked its way out. Right? And you might say, well, you could miss it, Scott. You could. It goes up, it pulls back, it turns. There's a trade. Right? 2 trades coming out of that situation right there. So as long as I'm keeping my eye out, can I wait and see if I get one here and then one here? And then all of a sudden I'm at May and things go sideways? Yeah. Remember. Oh my God, I haven't looked at that for a while. BYND. That was an interesting one for a bit, right? It was like Beyond Meat, it's the greatest. And then it's like, well, maybe it's not. And now it's like, well, it was a bit of a fad. Now I'm curious about some of these. Peloton. PTON. What's Peloton? PTON? Yeah. Oh, wow. I actually thought it was going to be closer to 4 or 5. So there you go. Surprise. All right, let's go back to silver. Yeah, all those Peloton bikes have become place to dry your clothes with hangers, right? You just kind of hang stuff on it, throw your jacket on it, coat hanger, drying rack / coat hanger. Silver. I actually think silver just made its breakout, and now I would trade the pullback. I haven't traded a lot of precious metals, but if this thing were to come back down and I could catch it at 19, yeah, I would throw. I'd throw something on 2023 bull call spread. I don't know, something like that. You can see the volatility has come in. making the prices a little harder with your options. Make sure you're keeping an eye on the implied volatility so you have a good sense of the way you want to come into your options trades. SMH, mostly sideways. SPY coming down, but it's off its lows. How's the contest looking? March. I don't know. I might even go April, John, with something like that, since it gives me in and out before the summer doldrums ensue. Oh yeah, where's my bees at? It tried. It's like, nah, it comes back down. It tried underneath. We said there's a good chance it would test above or below or both. Tested above, tested below. Now it's sitting very close to 388. I feel like I should just call it. Just like, yeah, why not? I'm just kidding. We're going to keep going. I will probably give you 5 minutes back, or there's a chance we'll end a little early if I want to cheat. It's not cheating. Well, Target. Yeah, Target not looking good. The retail coming down a bit. Toll Brothers sideways. I'm going to get rid of Toll. I don't think I would trade this. I don't like the way it looks. I'm not a big fan of the home builders. Tesla. No. UNG. That is one that I've been talking about. That was a good signal right there. If you put some UNG on, I wouldn't have been shocked. And if you did, I still would say you're probably still valid. It hasn't stopped out. So this will be an interesting one. Visa. I mean, it got a little bit of a hook, but it's just kind of floundered. It just sort of like sunk, and then it got 3 days of buying, and then it just sunk again, and then it's trying, and it's a bit overwhelmed by its own weight right now. It's just the weight of the market, the weight of the uncertainty, the weight of the financial sector. I wouldn't be shocked at all to hear that everybody's trading is, significantly down by way of number of trades and risk right now. Here's the VIX. How is it we waited this long to get to the VIX? So that was the signal that we got back here. And you can see, we said, is it going to get up? And it did. It's up in these upper 20s. It tested 30. And now we're sitting here. So now what? Well, overall, I think it's just sort of grinding out and finding some resistance. The question is going to be, does it turn and give us something like this? And this comes down and turns, and it gives us this higher low. That's going to kick my bearishness into gear, and it's going to have me thinking that we may end up there. Not good. However, if we drop from here and then we rise up a little bit and then turn over, that lower high would be what would, depending on what kind of a portfolio you had on at the time, it could be buying calls for balance, buying calls to hedge, possibly buying some speculative. Yeah, I mean, I'm going to be on the lookout for that type of a scenario. Oh, financials, you're in a bad place. A real bad place, dragging everything down. Industrials, not good. You're in a bad place too. Problem is, staples just kind of gone sideways. I would expect that if it doesn't see improvement soon, we're going to see money coming into staples. You can see already a little bit of a higher low on utilities already. Boom, it comes, and we seem to be breaking out of this consolidation. If I saw something like that, I would get bullish on some utilities and say, hey, we're going to be defensive going into the summer. It appears something like that. That's utilities. What did I miss? What symbol did I miss? There's not much out there right now. It's already fallen. It looks like we might get some kind of a bounce. Here's your thoughts. Do you already have hedges or bearish trades on? How are you going to manage them? Have you cleaned up your bullish trades yet? And if not, why are you holding on to it? And what are you holding on to it for? Don't let hope guide any decisions with trades that are currently losing money. Right? If you're in a new trade and you're down a little bit and you hope it stabilizes, okay. If you're in an older bearish bullish trade and it's losing and you're just sort of like, loitering in the trade, call it. It's done. If you have profits on bearish trades, make sure you're very aware of when and how you're going to take them. Are you going to scale out? Are you going to just shut it down? What are you going to do to lock those trades in? Sectors. Financials is the worst. We know that. Like that's definitely, if I'm thinking bearish, I'm thinking financials. I'm thinking materials, although precious metals look okay, but materials in general, not good. I'm thinking industrials. Technology is sort of lingering. Consumer stocks are down some, but not a ton. I'm mindful of if there's going to be cleaning up trades with a broom, not a vacuum. Yeah, makes sense. So those are the considerations right now. Don't force trades. Don't trade for the sake of trading. As far as rating this market on the potential for over trading, right? The best market is a nice low volatility, steady uptrending market. In that market, it is hard to overtrade. I want to get as much risk as I can, and I'll sit on things. Even if they go against me, I'm like, yeah, I'm going to sit on it. I'm going to give it some time. It'll come back because that's a strong bull market, and everybody's a genius in a bull market. That's not our market, though. This market is trying to recover. It's a bit choppy. We now have a VIX in the upper 20s. Yeah, this is a market where it would be very easy to overtrade. So be mindful. How much risk? How many trades? What direction? What sectors? How am I going to manage? The time frame should be relatively short right now. I'm not looking for trades to last 2 or 3 weeks at this point. Jack be nimble, Jack be quick. That's how I see it. That's what I'm looking for. That's my story, and I'm sticking to it. Okay, we're down to the last couple minutes. I'm going to go ahead and just award this gold medal as it stands now. You can see the C's were like, here it comes. It's coming our way. But unfortunately, the buyers managed to come back in. They're closing it down here in the final 3 minutes. We have firmly moved back into B territory. Look at us. I said we'll end right around 388. You can see we're at 388.05. That seems, John's like, there's 3 minutes left. Well, there is, but for these intents and purposes, the fact that it's right at 388 now, I'm gonna call it. I'm gonna give myself a gold medal. I'm gonna also give it to I believe Randy and no, Brad and Phil. I think that's it. Brad, Phil, and Scott, gold medal winners. Now the A's are like, wait, don't call it, Scott. It could get there. It could, but we've called it. So you have a bone to pick with me tomorrow. You can. All right, everybody, listen, I'll be here Friday morning. We'll figure this out. We'll have a plan. We'll stick to the plan, and we'll see where it takes us. Have a great rest of your day. As always, happy trading.